Oh my God, I gotta refill my coffee. Sorry, I got distracted. Sorry. All right, let me regroup here. Sorry. Sorry. I know, I know. Where is he? Almost. All right, read the disclosure. All right, 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 all right. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, guess what? In 55 minutes and 55 seconds, we got a thing called Consumer Price Index in the United States of America. Yeah, God, CPI, as an American will tell you. So anyways, this is an important event for the week, and we're hypersensitive right now, not just to geopolitics, but inflation, which leads to maybe the Fed's going to raise interest rates, yada, 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 yada. That's what the market's worried about, and so this is a big event. You got to remember non-farm payrolls was better than expected, so suddenly people are like, oh my God, the economy is doing so good, we got to kill the economy. And same thing now, if inflation is high, they're going to say inflation's high, so everybody knows the Fed has to raise interest rates, even though that's not how you solve an exogenous supply shock, which is what we have. We don't have a red-hot economy driving up prices. Once again, like COVID, we have a shortage issue, which monetary policy doesn't solve. So anyways, doesn't matter if it's logical. By the way, I know it's the wrong watch, right? Wrong watch. Too much chest? Huh? I'm too sexy for your board meeting. So anyways, important day, important news. And I should probably mention, I've been working on the spike engine that in this case, where do we get a CPI? Not BLS, BEA? Who reports? I'm having a brain fart. But anyways, we've been working with U.S. government agents. Well, we've been working on our engine that is connected to U.S. government agencies. We haven't been working with the agencies directly. We've been improving our engine connected to U.S. government agencies to get the headline numbers faster, because I've been trying but we had news yesterday, I guess it was, and it took about 5 minutes to get the headline news. And I'm like, whoa, 5 minutes. That doesn't cut it in the world of trading. Way too slow. And so we rebuilt the engine, and we tested it after we built this new engine, and things like CPI should take 1 second, sometimes less, sometimes more, like 1.25 seconds. Definitely less than 2. Fingers crossed. So we'll see if it works today, if we can pull that. And then if that is working, like if we're that fast now pulling the data, because we have certain limitations from the actual government agency reporting it, right? And we have all different government agencies that do it differently. But if this engine works, then we're going to try to apply it to the ECB, the Bank of England, the RBNZ, right? The Canada, Bank of Canada, StatsCan. Okay. They all have different reporting. New Zealand doesn't even have some weird, they don't report some data, and other, Australia does certain things quarterly instead of monthly. Like, it's a gobbledygoo mess out there, but it's our job to get it for you and display it in ways that you can hopefully trade better, huh? So that's what we're going to do today. Welcome to Forex.Today. Collaboration between Traders and Traders Way. Traders for analytics, Traders Way for execution. Yeah. Cool. So that's the spike radar. Let's go through our morning routine. Let's get a sit rep from Aiden. Hey, Aiden, what's going on in the world? Let me know what's going on right now.
Good morning, I'm Aiden from Traders. Let us get you up to speed on the evolving global landscape. Today's session is displaying a moderate risk-off sentiment, reflecting a cautious stance that is notably less aggressive than the severe risk-off trend observed over the past week. This daily defensive posture is reinforced by a decline in the U.S. 10-year yield to 4.528% as investors rotate into the safety of treasuries, while the U.S. dollar index remains largely unchanged despite significant selling in European and Asian equity indices. 1. Oil is pushing higher toward $90 a barrel as tensions between the U.S. and Iran escalate, which is shifting the outlook for central banks in Canada and the U.S. Gold has pulled back slightly but is holding above critical support at $4,100 as markets wait for tomorrow's big inflation report. European industrial data was a mixed bag, with Slovakia seeing a sharp 3.2% drop, while Austria managed a small gain of 0.6%. Overall, the jump in the VIX today tells us that traders are feeling increasingly uneasy about the mix of geopolitical war threats and high interest rates. Biggest movers right now, Ethereum and Platinum are down. VIX, natural gas, and wheat are up.
Yeah. Wow. So oil is way up to 89, which is interesting because we used to think 90 was low. Now we think 90 is high. So that's pretty good. Like up to 89 is a bad day. Well, that's good because we have it coming down. Okay. But gold coming down, that is definitely risk off. Bitcoin coming down, that's definitely risk off. Look at VIX back to 21.5. That's terrible. Terrible. That is risk off. That is brutal. And we were tickling 7,500. Now we're tickling, we're below 7,300. Ugh. Dollar index above 100. Ugh. 10-year way, way above 4.5. But as Aiden noted, if you analyze the yield curve, we do have money going into those treasuries, but that's kind of a risk-off sign, though, too. Meaning people are thinking that rates are high, but they're also thinking the stock market's near a top. And we also know that that has a lot to do with technicals, but that also has a lot to do with seasonals. And so some of the smart money is taking profit. And so what are they doing with their money? They're buying some bonds. They're going to hide out in treasuries. So that's not necessarily a good thing, you know? So, ugh. Yeah. So I'm just looking here at the trade. We had a lot of trade news yesterday. CPI coming out today. Little Bank of Canada event went on today, but we'll get to that in just a little bit.
1400.
US dollar. Upside risks persist on sticky inflation. BBHO. Trump says he's close to ordering new strikes against Iranian power plants and bridges. Only 11% of Europeans view US as ally, survey shows.
Slovakia. Industrial production falls 3.2%. Canada. Oil-driven inflation shifts Bank of Canada outlook. TD Securities. Gold slumps with upcoming US inflation reading. Mid-East tensions in focus.
US President Trump warns of escalating military actions against Iran.
1400 tallies. The immediate support for gold.
Hang on. Cool. Sorry. All right. So, yeah. Only 11% of Europeans view the U.S. as an ally. Okay. Yeah. Yeah, but 90% of Europeans have been to Disney World or Disneyland. All right. Slovakia. Industrial production falls 3.2. Come on, Bratislava. You can do better. Yes, the capital of Slovakia is Bratislava. You should know that. Kenyatta, oil-driven inflation shifts Bank of Canada outlook. Really? All right, so that was written by TD Securities, Toronto Dominion Bank. Remember that? Yeah. You're like, wait, is that what TD stands for? Yes. Now, is it true some knucklehead at this bank wrote that for FX Street? You could go and analyze the yield curve and see if other people, like those that actually purchase.
US CPI data expected to show inflation hit 3-year highs in May, reinforcing Fed rate cut bets.
See, look. This is classic. Okay, that's wrong. See? We know this is true. We know what's actually happening. So somebody at FX Street just said CPI is expected to show inflation hit 3-year high.
Bulgarian industrial output shrinks 4.1% in April.
So we see that at 4.2. So that is correct. Okay, 4.2. That is correct. 3-year high. Reinforcing Fed cut bets? We know that's 100% wrong. Whoever wrote that at FX Street doesn't know what they're doing. Because we know that's not a rate cut, that's a rate hike. We know it because we have the yield curve analysis. Reinforcing Fed rate cut bets? No, they're betting on a hike, not a cut. See, we know this. So we're like, aha, that analyst is wrong. Also, the TD Security one that I was picking on, what I was getting at is it shift the Bank of Canada outlook. First of all, is it true Second of all, where do we skew? Hike or cut? Well, we don't have it in the headline, but we have the data. We can just go and verify what direction of the shift, if there actually has been a shift. And because we have the data, we actually know this reporter is wrong.
Canadian dollar flows reverse as Bank of Canada looms. BN waits wise.
Okay? So you're the smart money now. Hang on again. All right. It's getting hot in here. It's getting hot in here. So take off all your clothes. Oh, dang, that DJ made my day like the butcher, the baker, the candlestick maker. Oh, almost ripped my shirt. Sorry, ladies. Didn't mean to bring the guns out. Oh. Calm down, everybody. Calm down. So let's take a look at risk. Okay, bad again. Yeah, bad again. Uh-oh. So not happy. Still risk off no matter what you think or how you feel. That is what institutional investors are doing. Hang on. Okay, so it's decidedly bad. We're having a terrible week. Terrible week. Definitely 100% risk off. Yep. And right inside the window in which risk off isn't abnormal at all. So that adds double meaning, because not only is it risk off, it's risk off in context. Now you're going to say, this is the war in Iran. No, it's not. You're like, well, that's what everybody on TV says. That's what everybody on YouTube says. Yeah, but that's just not true. Now it looks like it. You're like, wow, look at the numbers. It's risk off. Yes. Oh, and we have a war going on in Iran. That is true. So they are connected. Well, they're not connected, but the war in Iran is not the catalyst. I have charts that indicated these price levels 6 months ago. Like literally in November and December of last year, like we had the target on NASDAQ. I can show you if you don't believe me, like, because these things have been set in stone since January 1st. I mean, we could review that. So, like, the top that we had on Friday of last week was predicted back in December. Not predicted, but drawn on the chart. It's not a prediction, it's a mathematical equation. So, it's a statistical top, which we knew back in even December. And we hit it and the market stopped. That has nothing to do with the war in Iran. And remember, when the war in Iran started and it was a shock, and the United States was bombing thousands of targets and thousands of missiles and drones were going over the Gulf into places like UAE, stock market didn't do anything. It just moved sideways, as it usually does. And then when things calmed down, and we were moving toward a ceasefire, the stock market dropped 10%, which is actually totally normal too. And why 10% and why not negative 30? I mean, dude, we had an exogenous supply shock to oil, reducing the global energy supply by 20%. A 10% decline in the stock market does not describe that, so anyway, so now we're down, and we're in a tit for tat situation. Okay, fine, but it doesn't justify this. But if you look on seasonality, this isn't abnormal. Okay, nobody likes it, by the way, but there you go. And then, of course, when you talk to professional investors that don't do macro because they don't understand it, and many don't even do charts because they don't understand that, but this idea of like, well, this might be the SpaceX IPO on Friday. Really? Somebody asked me, a professional actually asked me yesterday what I thought the SpaceX IPO would do to the market. I'm like, I don't know. I don't have 20 years of SpaceX IPO data. So I don't know. I think that's the right answer. I don't know. Could be the best thing, could be the worst thing, but probably somewhere in the middle. But I don't have the data, so why would I have an opinion? I don't know. Okay. Cool. So coming back to this is what we got, 34 minutes. 3 years of CPI data. Okay. Last month we were predicting, or the market was expecting 3.7. It came out 3.8. That's why the candle is green. It was a beat. And then over here, this is something that I added today. This is what we're expecting, 4.2. So trend up, huh? In particular, higher than we've had. 3.7 is about as high as we've ever been. So 3.8 is very high. So 4.2 is cray-cray. This is headline. Okay. I don't like core because I can't compare all our different economies, because that's what we're trying to do ultimately, right? Compare the UK to the US as an example, and core and non-core, different calculations of core, it's super core. And look, for our investment thesis, we want to compare headline CPI. Okay, great. Now, core is interesting because it shows, it helps the Fed understand what they can and cannot do. So let's say core is lower than headline, then you say, well, something in core is pushed headline above 4, well above 4. And that means that it's not the economy. See, the Fed monetary policy can impact the economy. It can't solve the shortage of oil. So it says, okay, so to the Fed, it's kind of a scapegoat a little bit, but it makes sense. Where you say, okay, core CPI is only 3.6 or 3.2, okay? And they're like, so the headline's at 4.2, but our inflation is 3.2. Because the rest of the inflation would be something inside of core, which we know would be energy. And they're like, but we can't, if there's a shortage of energy, if there's a shortage of whatever, that's that. It has nothing to do with monetary policy. So if you were going to be more astute about this and you were going to try to use this data to predict future Fed decisions, you would use core and not CPI, and understand the difference between headline CPI and core, and then you'd use that in your model. But here's the thing. We're not trying to be an institutional investor, are we? We're trying to track what the decisions of the institutional investors are. Because we know they have a team that knows how to do this. Core, super core, chained, unchained, levels of inflation. And do we want to use some sort of ratio between core PCE and core CPI? And what about PPI? Maybe we have a whole inflation model like we have an inflation page, right? So maybe they have inflation models that put in 19 different variations of inflation to then make an investment decision. Do we care about that? We care about the decision. We don't care how they make the decision, because every institutional investor is going to be different, and they're going to have different teams and different databases and logic, intelligence. You could have smart money, you can have dumb money, but they all have billions of dollars. What we care about is tracking the aggregate decision of all institutional investors that are making that same decision. What does CPI say about future Fed decisions? Again, it doesn't matter if they're right or wrong or how they got to the conclusion. We want to track $1 trillion worth of investment to figure out, if you take all of this money with all of these decisions, with all of the resources and all of the teams and all of the data, what did the institutional investors do? And how did they change their opinion from yesterday? How did they change their opinion before non-farm payrolls on Friday? The world has changed since Friday of last week. And so that's why we do things like yield curve analysis. So we don't have to read an FX Street article that says a high CPI is going to lead the Fed to cut. Well, that's stupid. That's totally wrong. And we know it because we have the data. It's not my opinion. It's the data of $1 trillion worth of institutional investors. Nobody thinks that except some guy on FX Street. Oh, maybe he mistyped it or she mistyped it. Okay, that's a fair mistake. It's still wrong, and we know it. We're like, duh, obviously, because we have the data. We don't have an opinion. Okay? Opinions are like buttholes. Everyone's got one, and they all stink. So we don't have opinions. We know the facts, and we're tracking institutional money flow in real time to make our decisions, so we trade with the institutional investors and not with some journalist major at FX Street that made a typo. Oops! I don't know if it's a typo, though. How do you say cut instead of hike? I don't know. Right? Maybe they're ambidextrous with dyslexia. Yeah. I'm not making jokes about dyslexia. That's nothing funny. But I'll tell you, I want to start a motorcycle gang called Hell's Angles. And I think that's funny as hell. It's a motorcycle club for those with dyslexia. Hell's Angles. That's funny. But dyslexia is not funny. Yeah. Hang on. Where did my chat go? Where did my chat go? Hang on. How am I? There we go. And then I gotta click this button. Is it gonna load the chat or not load the chat? Man, really? All right, hang on. I gotta actually go to YouTube. The chat's not loading today. Hang on. 26 minutes. Don't panic. YouTube.com/Forex.Today. There we are. CPI Wednesday. Now I'm going to mute me. And there's the chat. Okay. It's not a groan. It's awesome. All right. So we'll come back to that trend. Nice. And this was supposed to load a heck of a lot faster. We rebuilt this, but why is it not working? It's too slow. Okay. Let me inform Aiden. Okay, we got one load to be bearish. This was supposed to load much faster. So I just informed him, Cody. Cody, I have two AIs, Cody and Aiden. So Cody now, I'm like, hey, dude, you rebuilt this engine to load faster, and it's not loaded at all. Cool. Nice. And I added this here so you can see sort of short, medium, and long-term trend analysis. That's what this is doing. We're analyzing 3 time frames. Okay, I think you'd agree that looks more bearish than bullish. Yeah. So long-term, medium-term, short-term. Cool. But then I thought, how about ultra short-term? What are the biggest movers up and down? And that kind of thing. And it's not quite working the way I want it to, but you know, you can see this went through an upgrade, right? So I'll flush this out. I don't think I have time today, but tomorrow. But I believe the data is correct. It's just not updating fast enough, right? You know, it might update every 5 minutes instead of 5 seconds or something. So we'll check. But VIX is high today. We do know that. WTI is up 2% right there. We're almost tickling 90 right now. We confirmed that earlier, so we know it's right. He's just got to work on it. But the idea, and maybe this is correct, where maybe it is neutral. I don't know. I'll have him check it. But I did want it to load faster. So I'll have to go through and then I'll ask him his logic. I'll test him on his logic Is this neutral? He might have his logic wrong. Maybe it's loading really fast, but he changed his logic. And I'm like, well, look, we have a long-term uptrend and we have a medium-term uptrend. And the market, and is this even neutral? He's got this gray like it's neutral. I'm like, but it's made a lower low. That's not neutral. So how could this be neutral, right? So anyway, so you got a brain. I got a brain. He's got a brain. We should all be able to look at this and say, well, I agree, I disagree, or it's neutral, but it's going to turn bearish because this looks like it's going to be a lower high. Okay, well, I got to go back and actually talk to this dude because this is Aiden now. I'm like, Aiden, what the heck? Why do you tell me your rationale for this being neutral? And he will give me his rationale. I'm like, well, I disagree. I'd say, look, this is got up to it, right? So don't put this gray. This should be green. So it should be long-term, medium-term green. And yes, I agree the short-term pullback is disconcerting for an uptrend. And you might say, well, that's why it's neutral. I'm like, okay, well, maybe I do agree with that, but then don't draw this as gray. Okay. The day trade, look, the scalp is not, the scalp is neutral. I would almost say that's a lower low. So, but he's measuring angle. Okay, so if it's, he's measuring the slope. So if he considers that neutral for now and turn it red in a bit, okay, see, I can accept that argument, but it better turn red soon. Day trade is bullish, which is this. That's right. Swing trade is neutral? No, it's not. That's not neutral. Or he better justify it as lower low or lower high, lower low, maybe. Okay, well then this should be drawn differently. I don't know. I'll make him justify it. And you should always be doing this. So now that I've done it, I'm like, well, maybe it is neutral. Because he might say, well, we made a lower high off of the slope as resistance, and now on the scalp side, lower low from a lower high. So therefore, he's right. This is turning bearish, and this is no longer bullish, despite the long-term trend. Okay, good. Okay, that's an argument. So we got to figure out and make sure he's documenting these rules of engagement properly, right? Yeah. Cool. So that's actually good. That's really nice to look at. So it looks like he is doing it, right? It just happened to be most of those things were neutral. All right. So how do we feel about NASDAQ right now? Yeah, so like now I would ask, so we got to put scalp on there. Okay, this one's green. How come the other one wasn't green? Yeah. Yeah, see, this is where I challenge him. I'm like, well, you got a bullish slope here, but on the currency, you said it wasn't bullish. You said it was neutral. What the heck's the difference? So I'm going to challenge him. Like you would challenge me if you disagreed with my point of view and we're sitting in the bar after a long trading day and I'm like, man, I'm bullish on that NASDAQ. And you're like, what, are you stupid or something? And I'm like, well, what do you mean? And you're like, you didn't see the annual pivot. No. So hang on. I'm loading my Trader's Way account. There we go. Hang on. I had to reboot my machine this morning. Okay. This is what I was talking about earlier today. People are telling you it's the war. People are telling you it's all kinds of things. People are telling you this, that, and the other about why the markets are falling. It's the war. It's something else. It's the Fed. So let me get my drawing tool. Snip. Or no, Epic. Sorry. Okay. So allow that to load. Okay, let's go back through history. Remember, I have almost 20 years of YouTube videos. My history is well documented. Okay. In the first quarter of the year, so when we were in this point, back in December, we thought the first quarter would look like this. Why? We have the freaking data, and this is the war going on. Doesn't look like panic to me. And weeks and weeks and weeks after the war started, then we had a downtrend in a period in which we almost always have a downtrend. And it was 10%, not 30%. So don't tell me that that's the war. When people say things like that, I'm like, wow, you have no clue that we were on the annual M3 and moved sideways even with war. And then when we got to the point where bearishness is normal, it fell. Fell to a role reversal, fell to the central pivot. Plus, our model way back here suggested right around April 1st, it would resume up again. And it did. To the exact day that we talked about in December. So, sideways, down, and then back up. Now, when we use logic and intelligence, not guesswork, remember, all this is set in stone. I can't do these annual pivot points after the fact. They're locked on January 1st. So, since we're bulls and we looked at a role reversal and we looked at annual pivot points, we said, well, this area is probably going to hold. And if that does hold, this is our aggressive target, okay, for NASDAQ. But what is this? Okay, let me get my drawing tool back. Let me change colors. Okay, what is this price right there? That was locked in place here, but would have been almost precisely the same when we talked about it back in November and December of last year. What is that? That's the conservative target, the conservative top, the conservative one for NASDAQ for the year of 2026. Now, our next target is up here. And so we know, because we have seasonality, we know there's two periods in the year in which, if we're going to hit R2, when it's likely. Now, it's the higher number. So you would think the first top would occur at the first profit-taking opportunity of the year for traders of the NASDAQ. And the second one would be at the second one. Okay. Cool. So according to our 20 years of data, this is about 2 weeks early, but not terribly ridiculously crazy. What I'm trying to say is none of this is random. So I heard a professional investor yesterday on Bloomberg talk about the decline in the NASDAQ, and all he could say is, well, a pullback is healthy, which means he has no idea why it occurred. He's got billions of dollars, and he has no idea this was drawn on our charts back in November. No idea. He's got billions. You know, they don't know. Oh my God. This makes you the smart money. I hope right? I hope you fully appreciate the difference here. Cool. Now, speaking about this, because, again, I wouldn't say it's a prediction, it's analysis. I didn't predict that. That was the statistical data, statistical analysis of 2025's data set. And you can look at these numbers if you're like, well, these, you don't believe, I don't believe in pivot points. Okay, whatever. Think of it this way. It's implied volatility. Imagine there's just a basic formula for analyzing implied volatility. And that number, you simply look at the volatility of last year, and you use that to project if something similar happened in the future year. Again, it's not a prediction. It just spits out numbers based on the recent data set. You're like, well, if that happens again, which is, you're like, that is what's implied. Based on last year, let's take a look at next year. But it's just math. There's no prediction. We just happen to do the math. And clearly other people do the math too, but also clearly many people just don't know. So they tell you things like diversification and ride out the storm. Oh, it's market timing. Blah, 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 blah. It just means they don't know. They have no freaking clue. But you do. So you should become the next generation of professional traders. Because you're in my humble opinion, you are better than that dude on Bloomberg Radio yesterday telling you that this was healthy. Really? So his clients are calling him up and they're like, oh, thank goodness this is healthy. No, you're losing money and you don't know why. That's unhealthy and unacceptable. Okay? I'm hedged. I'm good. And the CIA, the Council of Investment Advisors, we talked about this a month ago. We met on Monday, but we talked last month about this decline coming. Somewhere between June and July. July 1st, it's too late, baby. You're too late. So this year it happened the second week of June. Okay, well, that's not unusual, but it's a perfect price and a reasonable time. Cool. So there's no more excuse. Okay, you're that smart now. So what I'm getting to is another upgrade that you can't see that we did over the weekend. So you know that Aiden was first built on publicly available large language models like ChatGPT, like Grok, like Perplexity, like Gemini, like we had them all built into Aiden's brain, and part of what Aiden would do is look at the problem that I'm giving him and then choose the right public AI to do what he needed to do, because they're not all the same. And when it came to macroeconomics, he would use relational mathematics. Okay? Then the next generation is I moved him off public LLM because they've been trained on publicly known information. And of course, we know 95% of traders lose, which means 95% of everything ChatGPT knows is actually wrong, because he was taught based on the 95% that don't know what they're doing. So anyway, so then we get away from that and build our own LLM, but it's hard because it's influenced by the public ones because it still is using them. So then we moved him to our own server, cut him off from the internet. There's no ability for him to use any publicly used LLMs. So now we have our LLM, and which is great. And so now it's just Aiden using our data set. He doesn't know anything about anything else. He knows the way I trade and invest and interpret macroeconomics, and he only has access to the data. So then the next thing is we built machine learning, which I couldn't do in the first iteration because we were using publicly available large language models. Cool. So now we got our own AI, and now we built in machine learning, and now that started to work, and every day he was starting to learn. So then yesterday we added the next layer of infrastructure. And that layer is neural network. So Aiden is now, if you looked at the code, you would say, well, this isn't a chat bot. This is a neural network. Yeah. Yeah. We're that advanced. And remember what I said too, we also changed the way that data is brought in from all the central banks around the world. It doesn't just populate a database and then Aiden can go left or right or center and pull data that he needs. Instead, when the data is coming in, it goes through a decision tree. And he's solving a problem as the data comes in. I'll give you an example. Retail sales comes in, and we put a number into the database. Now we got a number in the database. What could we do with it? Well, we could track quarters and months and years of retail sales, and we could try to correlate it with other things, and maybe it leads to inflation or something, whatever. Instead of just put it in the database and then use it as needed, when we give Aiden a problem, how does the trend in retail sales impact CPI this month? Okay, that would be a problem AI could solve. But instead, as the data comes in, he's already thinking like a human would. How does this impact inflation? How does this impact GDP? How are things the same? How are things different? What does the difference mean? What does this amount of sameness, the R if you're doing stats, the level of sameness, what does that mean? How does this fit into a monetary policy framework? So increase in retail sales, increase in demand, consumers healthy, look at the job market, jobs are good, look at wages, wages are good, so spending can lead to inflation, plus an expansion in GDP, plus an expansion of jobs, leading to a shortage of jobs, leading to higher wages, leading to higher inflation that has nothing to do with an exogenous supply shock of energy, but instead a red-hot economy, and therefore lead the Fed to consider raising interest rates somewhere in the future. Therefore, look at the yield curve. Does it suggest that? Yes, it does. Blah, 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 blah. Just in the process of gathering the data. That hasn't even gone into the neural network. That's just gathering the data and organizing it to solve a problem from the very beginning. It's unimaginable, huh? Like, that is crazy cool. So now that we're doing all of this, so we got 4 layers in the pipeline, right? So now that we have a neural network, we've started the last part, and that is Aiden in the background on his own is going to start learning, because I've been teaching him these relationships. He's going to start making his own decisions, what to do with all this data. He's watching charts, he's watching the news, he's watching the economics, he's doing every calculation you see on the platform, the differentials, the changes, the trends. So he's looking at millions and millions of data points, bringing in real-time prices, real-time headlines, doing sentiment, doing this, that, and the other thing, right? Like literally millions of things all at once. And now he's going to the next step, now that he is a neural network, to look at not the data, but the relationship and change of relationship in the data. How does it impact the markets? So he's going to start making predictions. So we built a prediction engine inside the neural network in which he will say, oh, look at CPI. What does this mean for NASDAQ? I think it's going to go up, or I think it's going to go down. And then he creates a trade plan and then watches the outcome, scores it, and if it's not a good score, meaning it's not accurate, it didn't come to fruition as he thought, he's going to ask me questions, and I can discuss, well, actually, that good number is bad because it impacts this other thing. That's behavioral finance. And he'll say, oh, that's interesting. Okay. Yeah. Well, Don, I'm trying to build with you loyalty in the analysis that he's doing for you. I'm trying to get you to buy in that this is good data. The pound is strong. Look at that. Aussie is weak. Look at that. You know this. Boom.
Spike alert, 90 seconds until United States CPI YOY is released.
Because if you don't use the data, Don, then you don't change your behavior. I'm trying to get you to change your behavior, but we all know it's very difficult because we have our ways. Right? But if you say, oh my God, this is unbelievable, I'm going to start with the data and then do my normal behavior, but either in a different order, a different fashion. Maybe you do the same thing you've always been doing, but now you're doing it right on the right thing at the right time. Okay, there could be 1,000 different things you could be doing right now, but like pound Aussie is your best outcome. Right? If you're not shorting Aussie, if you're not buying pound, you're just doing the wrong thing. So if you do your same trading habits, but picking the right asset at the right time for the right reason, the potential of your outcome should improve. Oh my God, look how fast that was. Oh my God, is it right? Now you're supposed to read it. He didn't read it, but that came out like
United States CPI YOY actual 3.8% missed forecast.
Is it right? Or did he glitch? That was like 1 second. Tell me it's right, somebody. Tell me that's right. Please be right. That means the Fed doesn't have to raise interest rates. Maybe he grabbed the wrong number. I'm so afraid he grabbed the wrong number. Oh, I wanted to go here. Sorry. I hope he didn't grab the right.
Gold extends sell-off ahead of US CPI inflation data. Market jitters permeate as Trump looks to reignite conflict with Iran. Canadian dollar flows reverse as Bank of Canada looms. BN waits wise. US CPI data expected to show inflation hit 3-year highs in May.
Silver price today.
I'd like to bring that back up better, but I still don't have it on the headline. Oh my God. So we did it. No, he reported 3.8. $4.2. Oh,
Silver
so
price
it was wrong.
today. Silver falls according to FX Street data. U.S. May CPI plunged
Okay.
4.2% versus plunged
Okay.
4.2%.
All right.
Why?
All right. All right. All right. So he made a mistake. Oh, the lag isn't us. The lag is YouTube. All right. Hang on.
Spike alert, 90 seconds until United States CPI YOY is released.
Aha. He's got a problem there too. All right. Let me work on this. Hang on.
United States CPI YOY, actual 3.8% missed forecast.
All right. See, I have to train him here. He tried his best, but he got it wrong. Yeah. I'll let you eyeball this and see what you think. What do you think of that? Yeah. Neat, right? That's what's happening right now. Uh, that is our economic analysis doing fundamentals, technicals, and sentiment all together. I wonder if it's something simple like you grab core instead of headline. See, I'm just teaching, right? So, anyways, we got that, but this is organized differently. This doesn't organize by asset class. You see the difference? Okay. So he's learning. He's like, oh, okay. All right. All right. So, anyways, also, let me bring that up again. Yeah, and Don Pablo. Uh, that's funny. That's supposed to be unlocked. Also, right, if you subscribe to Tradars, like the what to do thing is so easily answered so quickly that you don't necessarily need me to go and do like what should you be trading, right? Like, dude, this is what you should be trading. Like, that's it. It's in the data. Um, it's such a simple thing to answer that I don't feel like my YouTube videos should be Like, look, trade these things. Okay, I'm done. What is it, a 5-second YouTube video? Right? Oh, so pull up those charts. All right, so we're bullish pound, huh? All right. So which pound pairs should I be trading? These ones. Like, that's so easy. That, I don't address that because if it takes you more than a couple of seconds to figure out what to be trading, then you're just not doing it right. And we have all that data, so to me that's trivial. Trivial. I think I'm here to explain the advanced macroeconomics or the way that Traders does it for you. And like, it looks simple enough like a signal service, but look, if we're doing 2 million calculations a second, that's probably better than the average person. And we're doing market sentiment, fundamentals, macroeconomics, and technical analysis, right? We're doing pivot points, we're doing moving averages, we're doing oscillators. You don't see them all in the charts, but they're there, right? We see the simple version. So it's like, what should you be doing right now? Well, you just, there they are. Those are your best setups right now. And now you go to your charts and you set them up, right? Right, Matthias says I listen to the macro because I think there's all kinds of YouTube gurus that jump you into trades. I think I can add different value, right? Now the other thing you can say is, well, that Wayne, you picked the pound quickly than you would have on your own. Well, I'm like, well, that's what this page is for. 15 calculations have been made to tell you that the pound is strong and the Aussie's weak. So you would assume that those would set up. So if you're looking at dollar pairs, you're probably looking at the wrong pairs. Now, let's say you skip the index radar and you just look at all Forex pairs, which is what we've already done. This is how we've made our calculations in the index radar. And what's the number one best thing to be doing right now? Pound Aussie. But we already knew that. This is the chart. Okay. What's the second best thing you can be doing right now? Pound yen. What's the third best thing you should be looking at right now on a 15-minute chart? On the longer term, this may be different. Well, that's always the issue in trading. Are you long-term, medium-term, or short-term? Are you intraday, day trade, swing trader? Like, what's your intention? But you can filter all that out. So, like, again, in seconds, I'm just like, oh, pound Aussie is where I start. Then I go to pound yen. Done. Done. Okay. But if I'm more of a swing trader, I'm like, well, that's happening now, but I want to be in a trade longer than a few hours. Okay, well, let's reverse engineer this whole thing. If you are going to look to be a medium-term trader, what should you be doing? Still pound Aussie. Okay. Now, if pound Aussie continues and it's just turning bullish here, okay, so now you could be buyers of dips. We're at 191, but at this rate, if we do continue, it'll go up 700 pips. Wait, whoa, wait, what? Yeah. What? Okay. Now, going out a shorter time frame here than what we did before, looking at this, okay, now we're looking at the same thing, but a different point of view. probably go up to MR3, then probably pull back, and then probably. But our best case scenario right now is up closer to 100 pips, then a pullback, and then up for much longer. Good to know, right? Yeah. Good to know. Yeah. So anyways, that's how we do it. So I'll see you guys in 7 hours and 17 minutes for our private daily market debriefing where we plan tomorrow's trades. We'll do that today in about 7 hours inside of traders.com. Traders.com, it sounds so expensive. All this data is so expensive. Yeah. Well, it's free. Yeah. Peace on earth. May the pips be with you. May your profits be above average.